Hello everyone, this is Mingjong. So welcome to this video. Today I'm going to do something different. I'm not going to talk about specific market, or rather just a general discussion on a $1,000,000 question. So has the stock market hit a bottom yet? I think this is a question traders and investors are very interested to know at this moment. So basically we have a very sharp sell-off, as you can see, from February 20 all the way down to 23rd of March. The sharp sell-off is roughly around 35 or 36% of the top on February, and subsequently we have a very strong rally. I think from the bottom we have rallied up around 30% till today. So this is a rather unusual period because based on the magnitude, the speed of the sell-off, and also the magnitude and the recovery on this recovery for this rally up, I think this kind of the V-shaped rebound is kind of unusual. So are we in a bottom yet? So is this the bottom that formed in 2020, or should we see another test of this low, or even a test in a form of a lower low like in 2008? So this is something that I will talk about, and also at the end of the video I'm going to address one thing that I think traders or investors tend to overlook, especially in this kind of the environment. So basically I will just address that, and hopefully it will help you to decide on how you can participate in this kind of the market environment. Alright, so let's just get started by looking at some market history. As you can see here, I have 4 charts here, but first of all let me just run you through this VIX index, the volatility index. As you can see on this VIX index, since we have a peak on the 19th of March, subsequently we have an unwinding of the VIX. So this is usually inverse proportional to the stock indices. And I would like you to pay attention to this period here. I think this is from the April, 6th of April till yesterday, 16th of April. This sort of texture and character is very different from the past. As you can see in this region here, this super volatile area, and this period here is kind of like less volatile, and we have a smaller candle, so the texture and character is totally different. I think since the unwinding of the VIX, we should see stock market get back to normal session, like probably a lot of risk on assets or risk off assets are correlated to the stock market, because the stock market is kind of like a risk on asset, same as the Bitcoin, junk bond, while the risk off asset, the safe haven like gold, bond, 2 years, 10 years, or the currency like Swiss franc or yen, these are kind of the risk off assets. They are correlate to each other. So I think we are kind of back to normal based on the unwinding of the VIX, and also this kind of the texture, it just looks more normal, and is unlike that what we have been through in this area. We also see the period where the gold goes down together with the stock market, because according to the news, those kind of investors or traders, they would like to just liquidate gold or Bitcoin in order to meet their margin call in the stock market, etc., etc. So these are some kind of unusual behavior in the market. but I think we are back to normal market behavior. Alright, so let's start with 2008, the global financial crisis, as you can see in this chart. Let me blow this out a bit. Okay, so this is 2008 global financial crisis. As you can see, the peak is quite distance away. The real sharp sell-off started in the September 2008. I think that's some related to the Lehman Brothers, Bear Stearns, etc. event to trigger the sell-off, and we see the selling climax and subsequent rally is quite sharp as well, but eventually we see lower low forming, and this duration lasts until March. So it's from September, or I should say it's from October to March. It's roughly around slightly less than 6 months for the bottoming process, and it's in a lower low format, lower low structure, and after that we just have a very good rally up and never look back. So what do we have in the current market? So we have a sharp sell-off here and hit a bottom at the 23rd of March, and subsequently we have a good rally up. So that's it. So at first look, it doesn't seem to have any similarity, but let's just take a closer look here. Let me switch the time frame to H1. I think you will see some similarity once we switch to H1. Alright, so the above chart is the current S&P 500 futures, and the chart below is from 2008 global financial crisis. So do we see some similarity here? I think these two charts is quite similar, especially in this downsloping structure, where we have a downsloping structure in the H1 chart. So this is some kind of the analog that I'm looking at. So once we hit the bottom here, then we have a good rally up, and eventually we just fluctuating, bouncing up and down within this upward channel. So I think this is very similar to 2009 scenario, where we have after we hit a bottom here, then we sort of in a up channel for a quite prolonged period of time. So I think this could be one of the analog to use for the bullish case. So if we think that the current market has hit a bottom, so this is the bottom, and this kind of the sharp sell-off already provided a very deep discount for the value hunters to come in and buy the market up. And if we look at back to daily here, okay, if we look at the chart here, we see that the rally doesn't really come with strong demand. In fact, the volume just keep just decaying. I think one of the possibility is that as long as the supply has been held and by the big hands or the money managers, while they just buy on the way down, then this is one of the possibility that we can see on this rally up with decreasing volume. And another thing, or another chart that I would like to look at is the 1987. So this is the chart from the 1987. I think in terms of the texture, momentum and speed, 1987 scenario looks more like the current market, because as you can see, we actually dropped like 35% of the peak, and in a very short period of time, and subsequently we did get a test, but overall the bottoming process also took probably October to December, I think at least 2-3 months for the bottoming process. So this is 1987 chart. So selling climax and then another test of the low, subsequently a backup action at a higher low. So the current market here is kind of different. If we look at the daily chart, it's just like a V-shaped rebound. So I think one of the main points that I would like to get across is that whether you are a trader or investors, always keep an open mind, because no one actually knows where the bottom is. No matter whether you are a chartist in a technical analysis, or as a fundamentalist, analyze all kind of the economic data to crunch the numbers. I think the market itself is just the market, so we can't really just predict where the bottom, or knowing the bottom is right here. We can only look at it on the high side, say, oh, okay, so that was the bottom. But definitely what we can do is to look to protect our part, to control our psychological aspects, and to keep an open mind. If this is the bottom, if the March bottom is a real bottom, what can we do now? One thing that I would like to address is that I mentioned there is something that there's a lot of the investors or traders overlook. I think that is money management. So money management, I think in itself is the best tool that we can use to protect ourselves and start participating the market. Because if you think this is the real bottom, so you're comfortable to trade or invest, then that's great. But you never know when will the second test coming to hit to test the low again. So you can always be a bit more defensive. So instead of allocating like 100% of your fund into the stock market, maybe you can find the right amount for you to trade or invest in the market, whether it's 1/3, 40%, 50%, or even 2/3. So it's really just depend on your comfortability. And if this is really the bottom, then that's fine, because you can always add back or scale in at a later time. But at least you are participating this uptrend from March till now. So while everyone is still worrying the COVID-19 situation, how bad the economic will be hit or has been hit, but the market is already run ahead. So from a fundamental point of view, I think people always say that, or the economists can just say the market always run ahead of economic around 6 to 9 months. I think this is pretty fair comment, because in the future, for the next quarter, coming up quarter, or even the third quarter, we know that the earning will be hit badly. But one thing that we don't know is whether or how long can the pandemic, the COVID-19, be totally under control or even stop. So I think once you have your money management in mind and be very comfortable, then I think you can start to invest or trade according to your own rules and money management. So if this is not a true bottom, means that there's another wave down to hit the bottom, whether it's from a higher low or even a lower low like the 2008 scenario, then at least you have some spare money to average down for investors, where you see some deep value showing up on some of the stocks that you in your portfolio. Or for traders, if it turns down, then it's even easier because you can always cut loss with your predetermined risk management strategy. So I think from the chart itself, definitely is still an uptrend, and we see there isn't any evidence of the excessive supply. That's why my view is still think that the market will just keep going up until we hit the resistance to have some kind of reaction. 2,900 level, 3,000 psychological level, 3,001 is another resistance level. So I think I will just stick to the plan with proper money management, and hopefully you get something out and find it useful in this video, and hope you enjoy this. So if you find it enjoy or useful for this video, feel free to just hover onto my picture to follow me, and also subscribe to my channel so that you can get instant notification for the next video. Alright, have a great weekend ahead. I will talk to you soon. Alright, thank you, bye bye.